Welcome to the Lending Forward podcast, brought to you by Atlantic Bay Mortgage Group. This is your home for real discussions about the mortgage and housing industry. Our hosts are here bringing you firsthand accounts from people at the heart of the business. And we're chatting with professionals from all corners of the industry as they help cultivate transparency around the future of the industry we love. Together, we are lending forward all we know to you. Thanks for joining us for today's episode. Let's dive in. This episode is sponsored by our friends at Informative Research. With Informative Research, you can simplify your success and get faster results with unbeatable service and technology. Their premier technology provides data-driven credit and verification solutions to the lending community. Their self-service portal enables loan officers and processors to make changes, request supplements, LOEs, and fix issues, all from the credit report itself. No emails, no delays, just resolution. To learn more, visit www.informativeresearch.com.
Welcome back to another episode of Lending Forward. I'm your host, Hannah McManus, and today we are thrilled to have a very special guest joining us, someone at the forefront of credit risk innovation and mortgage finance. Joe Marsocci is the Senior Director of Mortgage and Capital Markets at FICO and a 2024 Housing Wire Tech Trendsetter. Welcome to the podcast, Joe.
Thanks so much, Anna. Happy to be here.
I'm just happy I got your name right. I
it's
get
a good
so
one.
upset when people don't pay attention and they say Heather or Hannah without an H. And I'm glad you're here. And I'm really excited because, there's been so much buzz around credit scoring models lately, especially with FHFA approving both the FICO 10T and the Vantage score, 4.0. So if you don't mind, can we just start there?
Sure.
So do you mind breaking down really what distinguishes the FICO 10T from previous models?
Yeah, I think, absolutely. So I think 2 points, right? One is our FICO score still has our same minimum scoring criteria, right? So that same dependability that we've had in prior FICO versions still stands in the new 10T model. The biggest differences are that T stands for trended data. So instead of just looking at a consumer as they walk in the door and you pull their credit on that day, the trended data looks at their behaviors over a 24-month period. So the great thing about that and where we are today is that consumer behaviors have changed, right? The classic score was built in the 90s, and the classic or the FICO 10 is built off of more recent data. And so our consumer behavior has changed, right? We have rewards cards. We just use credit differently, like we pay off credit differently than we used to, right? And so being able to look at that over a longer period of time is so beneficial. So if you went and applied for a loan today, mortgage or non-mortgage, they're going to look at what you did today. And let's say yesterday you went and bought a new car, or you knew you were going to furnish this new house and you spent $25,000 in credit card debt that you'll probably pay off in 30, 60 days, right? Now it's going to look at, over the last 2 years, right? Yes, you kind of run that credit up, but paid it back down again. And so it takes that more holistic view of your behavior and then puts that into the credit model. So, that's the great thing about it, is that we don't have to be afraid to use credit. We don't have to be afraid of, you see a lot of consumers as they're going into the mortgage process, right? They take all of these actions, which are great. We actually created a mortgage simulator that's FICO score based, and we can go into that more. That kind of does that still for people. That tells you, if you take these actions, this is the potential impact to your score. But you don't have to be so conscious of it necessarily going into this process and make sure that everything's there. It will look at your behavior, which is huge. A couple other big things is that authorized user accounts are treated a little differently than they were before, right? You can't be a kid that you're on your parents' cards. I mean, my daughter is on my card now, as a young adult, and so but I'm paying that bill, right? So it does take a look at authorized users a little differently, and then medical collections are viewed a little differently. And so, we kind of follow, again, the GSEs are treating medical collections differently, right? Why not have your score do that? GSEs were also using trended data for years, right? And so especially Fannie They've been doing it since I think about 2016. So now not only do you get the benefit of that, but you also get the benefit in the score itself, right? Which helps consumers with pricing and other things as well. So it's not just the score itself; it's a number of other factors that will be beneficial.
Yeah, it sounds super beneficial, to be able to see all of the trends. How are you seeing lenders, adapting to the new model?
Yeah, so mortgage is really the only space that we've never changed scoring models. So
Oh,
FICO was introduced into the mortgage market in the 90s. I think it got added to the GSEs in about 95, give or take, and we've been on that same score, for the last almost 30 years now. So whereas other industries, FICO comes out with a new score every 3 or 4 years,
mhm.
and so other industries, they change scores kind of over a period of time. And it takes years to kind of do that. And we understand that. But the value now that mortgage is contemplating this and eventually will, make a change, at some point is the ability to start testing it now, right? So what we're doing and part of our team is we're going out, we're talking to lenders, and we're actually allowing you, and I know Atlantic Bay is one of the early adopters of this as well, is you can pull the classic FICO score and you get 10T for free alongside of it. So it's in a suppressed manner, so it doesn't impact your operations. But you'll get both scores, and you get to kind of take a look and see, how those scores perform. We see about a 5% lift in approvals from the analysis that FICO did, and conversely, about a 17% reduction in defaults on the new score. So we want lenders to be able to see the same things. And so we want you to start pulling alongside of Classic. And then you can kind of see that for yourself. And there are other products, non-QM and even VA, right, where you can actually start using that score today if you wanted to. And so, but we want lenders to be able to do that analysis on their own. And we are here to help. We have an internal analytics individual on our mortgage team. And we're getting data from some of our early adopters, and we're helping them run some analysis there as well, and then kind of giving them the feedback and what we're seeing.
That's really cool. Now, go back because I know you were talking about like the simulator that you guys have. Do you mind talking about that a little bit? We do have a decent amount of originators that listen to this podcast as well as, other industry professionals. But I think, learning a little bit more about your simulator would be really beneficial.
Yeah, sure. So there are obviously other simulators out there in the market. This will be the first one that is actually based on the FICO score. So our data scientists helped develop the simulator that is going out in the market. And we just actually launched in February. We already started with our initial partner, which was Zactus, one of the resellers, and they're working on doing it. But essentially what it will do is as a consumer and you're talking to your loan officer and you're looking at, a couple of different options, right? Maybe your score isn't where you want it to be from a qualification point, or maybe you want that score to kind of improve a little bit because you can realize a better rate, better pricing for the customer. So they can run different simulations and see what the impact of the score will be. And then the consumer can kind of take action on that. So, we're still kind of in phase one. We expect to be kind of fully functional by the end of this calendar year. And we'll have all phases, but things like paying down credit cards, paying off a car loan, right? Even you look at kind of increase in your available credit limit, right? There's different scenarios that can be used to show you what the impact of your score will be. So really, really consumer friendly, really, loan officer friendly. Most loan officers have seen a tool like this before, but again, the power of the FICO score behind it, which is the score that's used to decision loans and mortgages today, right? I mean, what's really more powerful than that?
Mm-hmm. And for the new model, and I'm honestly asking this as a consumer, for the
Sure.
the 10T model, I mean, the way that we, coach buyers and we coach borrowers to, manage their credit and pay down credit cards and, do certain things, will our guidance stay the same, or are we looking at different, with trending data, are we looking at different pieces that can either increase or decrease a credit score, or does it stay the same?
So as I mentioned, right, our minimum scoring criteria kind of stays the same, right? So the amount of credit you're using, the amount of credit you have, right? Like there, payment history, right? All of those things are still factors, right? So looking at that are still significant. We still also look for a minimum of 6 months credit history, right? And again, there's value in doing that. We have alternative scores. Again, we can touch on that kind of take you away. Like if you don't have a 6 months history, right? How does an alternative score kind of help you? And how should the mortgage industry evolve into kind of adding alternative scores into, the existing FICO score as part of that? But so similar guidance that you'll give, right? Can you predict the exact outcome? No, right? You can't do that today. But again, you're giving guidance along the same route that you were historically. I don't think a lot of that changes.
Awesome. And the credit scoring space has evolved a lot over the last decade or so. What have really been the biggest shifts the biggest shifts from FICO's perspective?
Yeah, again, I think consumer behavior is one of the big ones, right? And I think, at FICO, right, we are here to provide access to credit for as many consumers as we can, right? That again was the introduction of the FICO score into the model, right? You had all of these lenders, right, that had different criteria on how you would qualify, right? A 700 today at one lender could have been different at another lender, right? And so we kind of put that standard in place, and so that needs to stay. What we look at again, right, there is consumer behavior that changes. There are, access to credit. So there's, alternative, right? Younger generations use credit different than older, right? Again, even born, right? My father's not from this country, right? And so we joke all the time. And he even asked me one time, can you look at my credit score? And I said, Dad, there's not like a database that I could go in and do that, right? You can go out and do it, but it's the same thing, right? He's very conscious. So we just use credit differently, right? And so it changes. So, the movement a little bit to creating alternative scores, right, was to kind of capture that. So the ability to kind of score more people in different ways, right, in ways that they need to be scored because of their utilization, right, was important. And so, we have that. And so, as the scores, kind of get into the industry more, whether it be mortgage or all others, right, and kind of we think about how we should use those, right, that's a great opportunity for us to really be able to kind of impact a broader consumer market.
Let's dig into that a little bit, because I think, alternative scoring models are necessary, especially today. So, what different models are there?
So we have two main models that we have outside of just the traditional FICO score. We have Ultra XD, Ultra FICO and FICO XD, excuse me. And so those are two alternative scores that we have today that are out there. We certainly have others that we look at, but part of what those look at is again, behaviors. It looks at cash flow data. So if you kind of if there's access, and again, if you're going for a mortgage today, you're giving that lender access to your bank account, right? And so now essentially you can take that same information and we can provide a score based on your cash flow data. So, that's, again, very beneficial, right? People use things in different ways. They may not have credit, but they have, cash flow coming in and going out, right? And so being able to capture that and then provide a score that supports that, right, is really another way to look at it. So, that's one of the big ones. Again, mortgage isn't there today, but certainly, as we talk about access to credit, for individuals, right? And kind of how can we get more people into homes, which is one of our big, goals is to be able to do that. Having some of those opportunities or the ability to do that is something that we also talk to lenders about today.
I love that. And I think you said it a couple times, and it's the truth. Mortgage is usually one of the last ones to jump on board. So, what advice would you give lenders who do want to stay ahead of the curve? What can they do now to make sure that they're taking advantage of the models that they can take advantage of, and that they are staying ahead in how they're evaluating, credit risk?
Yeah. So first, obviously, is on the 10T side of things. Again, the fact that we're offering 10T alongside when you're pulling the classic score, right, is number one. So come and talk to our team, right? We're here, and we can provide kind of our contact information at the end of this, right, to kind of reach out to us. But certainly our team is here. We go to events. We go to all the same places that the mortgage industry is going to attend. When we're there, we want to talk to you. We do a lot of education, right? We do conversations like this to talk about alternative credit scores, right? Because it's, again, mortgage industry has never changed, right? So it's not only just that we're going to move from one version of the existing score to another, it's that there are other options out there, right? That are really additive, right? Nothing that should replace. Again, my background is in, lending and risk, right? So I've been on kind of both sides, both consumer and commercial. So again, cash flow data is very important to me, coming from a commercial world, right? And the risk side of things is, kind of, make it, have the information to make a decision. And so being able to run that 10T alongside, right, it's going to give you the information. So do the analysis. Let us help you do the analysis, right? Kind of we're here to do that. We're here to talk to you. We're here to talk to your teams. We talk about how to utilize it. We engage with the tech providers, right? The LOSs, the POSs, the kind of the back end analytics firms, right? We're talking to all of them. We partnered with MCT, who's common in the industry from a kind of securitization side of the business, right? Secondary. And so we're doing some work with them too, so that if you're using MCT, you can provide both scores. They can see it on their platform, and investors can start seeing that too, right? And so they can start seeing the performance of the scores. So we're helping kind of all the way through the ecosystem. So engage with us, talk to us, let us kind of educate a little bit, let us help wherever we need to. I can have a conversation with your credit risk officers, right, at an institution, kind of talk about what I would have done, right, previously. But, that was one of the big reasons I came here, was I can help all these consumers at a lender. I can help even more consumers at FICO, right? And so that was the big reason that I came here, is that kind of one-to-many concept. I wanted to help as many consumers as I can to be able to kind of have a roof over their head.
That's awesome. I had to ask, and then we'll get back to these questions. But
Sure.
How long have you been at FICO? Give me your backstory. Because were you in capital markets?
No, so I was in the capital markets. So actually, I hit my year yesterday at FICO. So I've been here. Thank you. Yes. So I've been here 1 year. Prior to this, I worked at some very large banks, and again, I ran credit and risk for most of those. I've actually run entire lending divisions before. I helped launch the lending platform at a large bank that wasn't doing that. So we've done kind of the wholesale. So I've done or managed everything from the origination side all the way through special assets, right? Kind of, so I've had the opportunity to do it all. And I work for banks and non-banks. And so I've seen kind of the whole mix of things. And so, and since we're asking, right, and I'll take a few minutes, but I was with a private equity group, and we purchased a bank in South Florida. And it was an older bank, established in the 50s, small community bank, great establishment, great group of people. But I had reached out to an individual that I knew that worked at FICO, and I said, hey, look, I need to do something different, right? I need to make sure that I can serve these consumers. I need to be able to kind of build and grow this bank. I need to strengthen this bank and do all these things. What do you have for me? And he said, oh, well, we have this new score, 10T that's coming out, and we're building this program. And I was like, oh, great, I want it. Well, it wasn't ready for me yet, but it was that concept of like, okay, well, I want to know more about it. I want to know more about FICO, and I've been in this industry for a long time. Sadly, like the gray hair is only partially from my daughter. The rest is, probably from mortgage, if you can. But I've been in this industry for a long time, so I've seen a lot. And FICO, you use it every day. But the level of education that I have now about FICO versus what I had in 20 some years in the industry is so different. And so I love to be able to kind of spread that. I love to be able to have these conversations. I love to be able to talk about all the other things that we can do to, again, help consumers. But that was kind of my background. So I did a lot of CRA lending. I did commercial lending, so apartments and what have you, right? So again, just a big focus on how do I provide housing to individuals, whether it be home ownership or a multifamily, apartment complex that I can help, build and kind of create more housing for people who need it. So
I love that. And I love, what you've been saying is like, FICO's giving options, right? Like I I think there are still a lot of misconceptions or myths, or call it what you will, but I think there's still a lot of misunderstanding around how credit scores work, especially in the mortgage world, or what's available. Do you mind kind of sharing your knowledge on, the common misconceptions that you hear a lot? And then at the same time, I really want you to bust them.
Yeah. So the biggest one that I hear and then I kind of listen to is that the FICO score can predict risk, right? It can predict default, right? And that's not what the score does, right? It rank orders risk, right? And so it's different. And so one of the things that we talk about, and we talk to a lot of lenders, is you originate a loan, you close that loan, and that loan may sit in your portfolio for it's a 30-year loan. So it could essentially sit there for 30 years, right? Most loans don't stay that long on the books. People refinance, but the average, at one point was about 5 to 7 years. Please don't quote me on that exact time today, because again, I've been out of it for
I'm fact checking you all the time.
Yeah, exactly. Right. Things change so quickly. So what could have been true yesterday is not actually true today. Right. So, but essentially those things will stay on your books for several years. Right. And so a lot of times you use that original score and you keep that score. But, score migrates, right? Our behaviors change, things happen, right? And so even today, we talk to a lot of lenders who don't ever refresh that score, right? And so we actually offer, an account management score that we can also provide to help you, kind of take a look. It's a very, very different than pulling the full report on the front end, right? But you can look at a score. There's no impact to a consumer or anything like that, but it helps you as a lender, kind of continue to manage, that portfolio. How do you have to, focus on collections, right? How are things changing? How do you have consumers who potentially may refinance? So it's, it's different ideas to be able to do that. So, the fact that kind of the way that the score works, the way that score migration can happen over time, right? Those are some things that they're meaningful, they're impactful, right? It just changes the dynamic. So very valuable to be educated, kind of in real time as much as you can. So we just sit with that origination score sometimes, and there's a lot of value in kind of getting a refresh score when you can.
Love that. I love that. Well, where do you see credit scoring going in the next, I want to say 10 years, but I feel like you can't predict what's going to happen in 10 years based on the last 10. Where do you see it going in the next just couple years? I mean, I'm assuming this trending data and trending models are going to stick with us for a while. I hope they do. But where do you see it going?
Yeah, again, I think with the access to the information that's out there today, right? When we look at alternative scores, right? It is a concept of what else is needed. Again, the classic FICO score has performed, great over, the 30 years that it has. So it's great. It's just what else does the industry need? What else do consumers need, because consumer behaviors will continue to change, right? So it's like you said, it's hard to predict, Hannah, what's going to happen in the next 10 years. It's hard to predict what's going to happen in the next 2 years, right? So we thought the FHFA was going to do something right and maybe they still meet the timeline, and we'll find out probably when everybody else does. But regardless, right? I think behaviors have changed. Consumers need more, and so the shift to a new score should really be inevitable. And then what other additives onto the score, right? Because again, it has performed so well. But what else do we need in addition to that? And so that's why I do like the ideas of the alternative scores, some different kind of how do you look at your resiliency indexes, right? We have a score around resiliency index too. So we look at kind of different things. So it really is, what else does the industry need in addition to the score today? And I think that's where we potentially go in the next 3 to 5 years. How do we get more education around that? How do we show the benefits really to consumers, right? And again, protect the liquidity and the risk on the other side of it, right? Those two things are important. You can't have consumer mortgages without the liquidity coming in, and so we want to be able to serve both sides of that equation.
Mm-hmm. And I think you just said it, but educating consumers is a big piece of it. Educating ourselves is a big piece, but educating the consumers, I think, is, absolutely necessary. I mean, for the, originators listening, potentially real estate agents listening, I know they're not talking about credit as much, but, what piece of advice would you give the originators when they're talking to consumers to make the consumers feel more comfortable around FICO and credit scoring? And there's just so much anxiety around credit scores that, how can we make them feel comfortable and a little bit more educated on the process?
Yeah, again, I think we can help originators be as educated as we possibly can too around it. We also have, you can go out to My FICO and consumers can go and look at their scores themselves, right? And so kind of having the education, again, it's still valuable to be prepared even with trended data, right? So kind of know where you stand going into that process, right? And know what it looks like. So, I think education is key. I have this conversation all the time, right? It's not just about the score, right? There is kind of a, be smart about what you're doing, right? And so the score is impacted by that, but your behaviors are important and your behaviors follow you for years, right? And so kind of just making sure that you're conscious, overall of doing that. Again, I love to go back to my daughter just because she has that credit card and she's like, Dad, how much money can I spend, right? And it's like, and so, she'll come to me one day and say, I want this. And then the next day I want this, right? And I don't know if you have kids, but many of us, and even as adults, right, we go through the same things. I want this. Tomorrow I also want this, right? Well, at some point, kind of you have to make decisions, right? As my father would say, money doesn't grow on trees. I think all of our parents probably said that to us at one point or another. So it is just kind of that. So I'm trying to teach my daughter young, right, the value in doing that. But because I do think the education piece of it and kind of realizing that, not in a negative way, but kind of the consequences, like what is going to happen if you do this? What if you get your nails done today and tomorrow you want whatever it is you want to order DoorDash because you stayed home sick, right? Again, real life
Yeah.
scenarios that we all go through, and even sometimes I don't want to go anywhere. I'd rather DoorDash instead of cook what's in my refrigerator, right? But do I really want to spend the money on that? Is that the best place to do it? So, I think education is key. But again, consumers can go to My FICO. They can look at their score for free, right? You can kind of, loan officers can sometimes kind of send them there, right? They may be a little bit early in the process and not ready to kind of go through with a pre-qualification or pre-approval, right? And so there are other ways for them to start seeing where they stand.
I love that. I think that was wonderful. I have 3 kids, but they're little. They're not spending money yet. My 6-year-old gets money, but he refuses to spend it. So
that's great. Yes.
There's that. But I love how you explained it around it's more of a behavior than it is a score. I love that. I think that's so powerful. And I think you could really build off of that, especially the younger you can teach people around their spending habits and all of that. I really love that. Yeah. I know we're coming up on time, Joe, and we could probably talk just FICO all day long, but I can't let you leave without asking you. This is the Lending Forward podcast. We love to lend information forward, and we ask every guest, how do you plan on lending it forward for the rest of the year?
So I love doing things like this. We do. FICO also does thing that's called Score a Better Future, right? So we're out there, right? We're trying to help educate. And so I participate in that a little bit, and I help, even internally with teams, right? Whether I'm out there facing. So, that's one of my big things. And kind of just being available, right? How can I help, the lenders? How can I kind of guide you? We have large and we have small lenders, right? It doesn't matter. And the small lenders sometimes don't have the right resources, right? So we want to be there. We want to be that resource for them. So that's kind of one of my big things is I try to bring my expertise here. So again, I can help more lenders who then can help more consumers. And so that's really hopefully my pay it forward for the year.
I love that. And we're so grateful to have you on. If any of the listeners do want to find you, where do they go?
Yeah. So again, you can find us at most events. We're at all the MBA events, right? We're at conferences all over the place. You can also email our team. You can go to fico.com/FICO score 10T, or you can email us at ficoscoreinfo@fico.com. Hopefully I said that slow enough, but
we'll put it in the show notes.
Perfect. That sounds great.
Awesome. Well, thank you again, Joe. I really do appreciate all of the knowledge that you brought to the podcast today.
Yeah, it's great speaking with you. Thanks so much, Anna.
Thanks again for tuning into today's episode of the Lending Forward podcast. Be sure to subscribe to our channel, follow us on Instagram @LendingForward, on YouTube, and LinkedIn. Catch us every other Thursday with a brand new episode, and go lend something forward today. Atlantic Bay Mortgage Group, LLC, NMLS number 72043, NMLSconsumeraccess.org is an equal opportunity lender and employer. Located at 600 Lynn Haven Parkway, Suite 100, Virginia Beach, Virginia 23452.